It's when they're available. We spend a lot of time. I spent a lot of time looking at contracts. There was a company I remember investing in a few years back, and I won't share the name of it, but it was a spin-off, and the incentive contracts, all the restricted stock vested on a very accelerated basis according to price points that were tremendously elevated from the current levels. Like factors of 20 above the current levels was where the vesting started to kick in. And it was a very small float stock. And sure enough, they hit those levels. Reading those contracts gave an awful lot of incentive, because you're thinking, okay, let's say you're on the other side of this. You're the guy who has to sign this contract, and you're negotiating for it. And the stock's trading at 20, and you're signing a contract that says, when the stock hits 200 is when I really start getting vested. Either you're really ignorant, or you're just highly, highly confident of the situation that you have. And I was willing to bet on the latter, considering these were insiders negotiating these contracts. And so that was something where we were able to look at a sizable return in a relatively short period of time. And the real tell there, the check on all the valuation work that I did, I could see, I think I can get there. But when you're looking at numbers that are that far removed from where you're currently sitting, you want some sort of reality check. And in this case, the incentive contract provided that, because it showed that the management that was taking over this new company had a pretty good understanding of things that was congruent with the way that I was seeing it.